Very good evening, viewers, and thanks so much for being with us here on the Business Today show. I'm Chaiti Narula. Let's begin the show with the top stories. Air India signs the mother of all aircraft deals, orders 250 aircraft from Airbus. Delivery over the next 7 to 8 years. Another similar order expected to be placed with Boeing soon. Market snaps two-day losing streak to close well in the green. Sensex surges 600 points above 61,000, aided heavyweights like RIL and ITC. Nifty clocks in 150-point uptick to close above 17,900 levels. Tug of war between FIIs and DIIs will continue, says Credit Suisse's Neelkant Mishra, as the Adani rout and inflationary pressures take centre stage. Believes markets will continue to tread waters. Shares bearish views on the insurance space while remaining constructive over PSU bank names. Adani Enterprises posts a profit of 820 crore rupees in October-December quarter. Revenue jumps 42% on year. Stock rebounds after falling 5% in today's trading session. Rise in wholesale prices at a two-year low in Jan. WPI falls to 4.73% despite rise in food prices. Big contrast to 80 basis point spike in consumer price inflation in Jan. Ground report from village near Vaishno Devi, which is set to play a massive role in Atmanirbhar Bharat. A look at the lithium reserves which will electrify India's future. Air India has signed one of the biggest deals in aviation history. The Tata Group-run Maharaja has ordered 250 aircrafts from Airbus at a listed price of $34 billion. This is one of the biggest orders ever placed by an Indian airline. The aircrafts are going to be supplied over the next 7 to 8 years. The airline had in September signed a lease for 30 aircrafts from Boeing, 25 737s and 5 longer-range 777-200 LRS. The airline is expected to sign a mega aircraft deal with Boeing as well. The Airbus order comprises 210 aircrafts from A320 family, 140 A320neo aircrafts and 70 A321neo aircrafts. Rest of the order is for 40 ultra-long-range twin-aisle A350 aircrafts. The deal is a major political handshake between India and France, and the geopolitical play was clearly visible during the deal announcement with both Prime Minister Narendra Modi and the French President Emmanuel Macron present for the occasion.
That we have signed a letter of intent to acquire 250 aircrafts, 40 of them on the wide body A350, which we will use to fly all ultra long distance across the globe, and 210 narrow body. And we have also have significant options to increase the fleet order once we grow.
Domestic indices mirrored global gains ahead of inflation data from the US. This as the domestic investors still reel under pressure of domestic inflation coming in at a 3-month high. The Sensex has resumed the rally, surging exactly 600 points to settle above 61,000 levels on your screens right there. Almost a percent uptick in today's trading session. In fact, the Nifty at 17,930, up 0.89% in today's trading session, closing about that important 17,900 mark, nearly 160 points higher. Now, what aided these gains? UPL, ITC, Reliance, Adani Twins, Hindalco were amongst the top gainers of the sessions today on your screens right there, all gaining upwards of 1.5%. Now, on the flip side, you can see names like Apollo Hospitals, Eicher Motors, you've got SBI Life, BPCL, Grasim, top laggards on the Nifty today. You can see that on your screens right there. How does the Budget 2023 math add up, and what is the prevailing market sentiment on the back of that? How will the markets fare going forward? India Today's Group Business Editor Udayan Mukherjee speaks to Credit Suisse's Neelkant Mishra regarding the best investment strategy to beat the street. Here's an excerpt from that exclusive conversation.
See, when you're thinking about investors, see, one is the view on the economy, and the second is the view on the markets. And I think the view on the economy is still quite rosy, especially on a relative basis. I think India is one of the few economies with a fair degree of visibility on medium-term growth. The challenge for the last 16 months, and that continues, has been on the markets because they were pricing in a lot of that optimism by, I think, August, September of 2021. And since then, we have seen this period of consolidation, which I think can run for another year or so. Now, I am actually less in the camp of the India versus China trade, meaning that if China does well, then India does badly, and vice versa. Uh, I'm more in the India and China trade because when we did this bottom-up analysis of 6,300 funds, we realized that even during the period in which we saw significant FII selling from India, the India weight in those funds did not change. And what that suggests to me is that they were trimming off on India because EM funds were seeing outflows, Asia funds were seeing outflows. So as optimism came back around China, and of course that market has moved up 50%, India started to see its own share of flows. And I think the tug of war between domestic and foreign institutions is likely to continue because a lot of the domestic institutional flows are what I call the unintended flows, meaning I put money or my some deduction from my salary goes into EPFO and then EPFO puts 15-20% into the stock market. I buy, I don't, but some people do buy guaranteed return funds from insurance companies, and a lot of that money goes into equity markets. A lot of the folks buying SIPs are more looking for beating fixed deposits over a medium term, and therefore are not really, investing in equities directly. And therefore, I think this tug of war between unintended but very large flows of capital domestically keep the market a bit more expensive than it needs to be, and FIIs keep selling. And on that measure, I think we have actually corrected quite a bit in the sense that the India premium to the world on price to earnings used to be close to 60% at the peak. It has now corrected to around 20%, which is kind of middle of the range of the range that we saw in the prior decade. So it is less expensive relatively than it used to be, though I think there is still a bit of correction that is due.
So you said that this consolidation might well continue for another year. So do you expect the market to basically tread water and not do much, or are you expecting a significant price correction from here as well?
No, I think it would just tread water. So I tread water because I think the strategy of buy the dip, which I don't think is much of a strategy, though it has been reinforced by what happened during COVID. And a lot of people have made a lot of money, and therefore every time the market falls, there are new flows that come into the market. So I don't expect significant absolute correction to happen, but the roll forward support that we get, basically a year from now, we'll be trading on FY25 earnings, which are as of now supposed to be 13-14% higher than FY24 earnings, which is what we are trading on now. And therefore the market then starts to look quite reasonable on price to earnings.
What about the Adani Group episode? Is that a factor at all in coloring sentiment for the kind of people that you spoke about, the domestic crowd or the foreign institutional investors that you may be speaking to?
Look, when people buy, I mean, there are very few people or institutions that buy ETFs, say a Nifty ETF, right? So maybe the EPFO buys Nifty ETFs, maybe a few global macro funds buy Nifty ETFs. Everyone else buys stocks. So the index values that we see are a combination of the result of the buying, selling of individual stocks. And there is no reason why someone should feel less comfortable about Indian IT names or Indian bank names because of the events of the last couple of weeks. So there is a lot of chatter. There is a lot of course, commentary in the financial media. But as you would have noticed in the last couple of days, that is slowly starting to die off, right? So basically the news flow on that, I think in the next week or so, maybe 2 weeks, is going to become, overshadowed by new developments. And people will forget about it. So I don't think that that will have a very lasting impact on the Indian market.
Mm. I want to talk a little bit about the union budget, but I want to start off with the micro aspect of it, which because you spoke about insurance products and money coming into the market through insurance products, and it is the one space which got hit very badly on the budget day and thereafter. Have you, as a house at Credit Suisse, downgraded your view on the sector after what came through in the budget, insurance?
So we have been very negative on life insurers for I think about 2 years now, because we even when we initiated coverage on the names, you remember 2 years, 3 years back, there was a whole spate of new listings. We highlighted this point that they are life insurance companies, but they are more of asset managers, and asset managers' earnings don't deserve this kind of multiple. And in a way, we were worried and cautious about exactly this kind of regulatory arbitrage that they were benefiting from, and that it could get closed at any point. So we've been underweight that sector, and we've had neutral or sell calls on all of those names. On general insurance, of course, we are, and then health insurance, we are a lot more constructive. But those firms don't sell these products.
Mm. You said that the Adani Group should not change a stock picker's view on what companies he or she is buying, and but the one space which got hit quite badly during that whole saga were some of these public sector banks which have exposure to Adani. How do you see the impact on the banking system at large, and does that reinforce the market's differentiation in the PE multiple or the price to book multiple which it accords to private banks versus public sector banks? Seeing that once again, when there was a tricky issue, it was the public sector bank which had the exposure to questionable assets, but the private sector did not.
See, some of the impressions are very hard to do away with, right? Which is why we think that the valuation gap between private and public sector banks is not going to narrow very quickly. So conversations with investors suggest that because these stocks had moved up a lot, they were sitting on significant gains. So at least the folks who had bought these stocks early had been sitting on gains, and so at the first whiff of a risk, they just booked profits. And I don't think fundamentally there is any additional risk of defaults or bad loans that can come through for the PSU banks, and therefore we remain quite constructive. We are a bit selective among the PSU banks. Remember that these banks still have lower return on assets than many of their private peers. They, as you said, have credit standards which can create problems over the medium term. But at least over the next 12 to 18 months, we don't expect their NPAs to start worsening. And to some extent, given that there is now greater competition for deposits, their stronger deposit franchises, the fact that they're sitting on a lot of excess SLR. So for the higher quality PSU banks, I know there is a gradation between them as well. The valuation gap between the private and the PSU banks has again become quite wide, and I think they provide good opportunity.
Catch the full interview on our other platforms, YouTube and our other official website, www.businesstoday.in. The Adani Enterprises stock did a complete U-turn after its quarterly results were announced. The flagship Adani company declared a profit of 820 crore rupees in October-December against a loss of 11.6 crore rupees in the same period a year ago. So this is a YOY comparison we're bringing to you at the moment. The revenue rose 41% to 26,600 crore rupees. Adani Enterprises stock that was down nearly 7% if you remember in trade bounced back after the results to close up 2%. The company has said it will focus on the twin objectives, growth and the reduction of debt. It added that while it is looking at strategic opportunities to expand, it is expecting growth to be driven by new energy, airports, resources. The earnings report that has come out said that amongst its data centers, the one in Chennai was already operational while 4 more were being built. Adani Enterprises also reported 32% uptick on quarter from its Australian coal mines. Adani Group shares were selling under pressure again today with 7 of 10 stocks ending in the red. While Adani Enterprises managed a bounce back after the quarterly results, 6 group companies including Power, Green Energy, Transmission, Total Gas, Wilmar and NDTV closed at the lower circuit of 5%. Apart from the flagship company, and you can see that on your screens as well, only Ports and HCC closed in the green. The group has also lost a whopping 10.43 lakh crore rupees in market value since that Hindenburg report came out on the 25th of January. The discovery of a massive deposit of lithium near Vaishno Devi Temple in Jammu has strengthened India's position against China in battle for the battery space. The 5.9 million ton deposit is one of the biggest in the world and crucial to Atmanirbhar Bharat plans of the central government. This discovery ensures India is going to be having sufficient supply of mineral crucial to electric vehicles and electronic gadgets. My colleague Sunil G. Bhatt from India Today Group has this report from Ground Zero.
Riyasi district's only claim to fame till now was the venerated Vaishno Devi temple in the Trikuta hills near Jammu. Now it's these rocks which have put Riyasi on the global map, making the land here one of the most valuable pieces of real estate across the world. This innocuous rocky piece of land, totally ignored till now because it was unsuitable for agriculture, reportedly hold 5.9 million tons of lithium, a mineral crucial to production of batteries and electronic items, indispensable for global plans to shift to electric cars in the next few years. With this discovery, India now has the 6th largest lithium reserve in the world. The biggest mines are in South America, with Australia and China at number 4 and 5.
We will be having our own reserves. So that means total dependency on import of lithium. You know, lithium is basically used in mobile phone batteries, laptops, everything we use. And today is an era of promoting electrical vehicles, EVs. Now lithium will be available here in the nation. We don't have to depend outside, and we'll be heading towards self-sufficiency in this sector.
Lithium has been classified as an atomic mineral by the central government, making its mining a subject of national importance. Mining also is crucial because of the 98 million tons available in global mines. Just 26 million tons is extractable. Last year saw 130,000 tons of lithium being produced, most of it being consumed by electric cars, whose production rose 60% on year to 10.4 million units. By 2030, electric vehicle sales are expected to rise fourfold to more than 40 million units. For India, the discovery of lithium is a boon. Each battery for an electric vehicle uses about 8 kilograms of lithium, which was entirely imported till now. Lithium imports stood at 8,811 crore rupees in 2020-21 and rose to more than 15,000 crore a year later. The first 8 months have already seen lithium imports of nearly 15,000 crore rupees. The biggest importer is the EV industry. According to reports, Ola, Ather and TVS import from LG, Hero and Ampere from China, and Bajaj and Tata Motors from Panasonic. The spurt in demand has seen prices of lithium jump tenfold since November 2020. Prices reached a high of $87,000 per ton last November before cooling to $69,000. For the villagers in this lesser-known area of Riyasi, the discovery of the crucial mineral is a taste of sweet success and a hope for revival of their local economy.
2 साल इन्होंने पूरा इसका सर्वे करके वो लखनऊ में भेजा, लखनऊ से पास होकर कल ही जो आपको खुशखबरी जो हमारे डिस्ट्रिक्ट के लोगों के लिए खुशखबरी, सलाल के लोगों के लिए बहुत बहुत खुशखबरी है, मुबारकबाद है कि ये हमारा रोजगार का एक नया सुनहरा मौका है.
The people in Jammu and Kashmir's Riyasi district are on cloud 9 after the discovery of lithium reserves. The news has triggered celebrations and the people have erupted in joy here. Clearly, the discovery of lithium reserves is not only going to transform this region, but is also going to give a major boost to the electric vehicle industry in the country. With video journalist Neeraj Kumar, this is Sunil Bhatt reporting from Riyasi in Jammu and Kashmir for India Today.
Wholesale prices seem to have cooled a bit in Jan. WPI fell to 4.73% in January versus 4.95% a month ago, touching the 24-month low. This is in sharp contrast to the consumer price numbers that were announced yesterday that showed a spike of 80 basis points over December. The wholesale index managed to stay low despite a sharp rise that you saw in food prices and primary articles inflation. Fuel and power and manufactured products, the pricing saw a slight decline in January. India is a very important market for Lulu Group, says Anant AV, who is the India director of the Lulu Group. The company is all set to expand in Ayodhya, Varanasi, Gorakhpur and Madhya Pradesh. Listen into this exclusive conversation with BTTV's Chetan Bhutani.
Tell us about investments in the state. You've been expanding very highly in India. So give us an idea about what are the plans, especially for the state of Uttar Pradesh.
Well, as you're all aware, there was a delegation from the government of Uttar Pradesh which had visited United Arab Emirates last month. We had a lot of deliberations with our chairman, Mr. Yusuf Ali MA, and we have signed MOUs with this state for multiple projects within the state. As you're aware, we opened our first shopping mall last year in Lucknow. We are now poised to come up with malls in multiple other locations within the state, namely Ayodhya, Varanasi, Gorakhpur. We are also coming with a large state-of-the-art shopping mall and hotel in Noida. So all these projects are underway. Some of them have been finalized, and we're also into the food processing sector where we've acquired land in Greater Noida. The construction of that project has already started, which will be operational within the next 18 to 20 months. The shopping mall also would be starting quite soon. So in the next 3 to 4 years, you will see our presence across the state of Uttar Pradesh. For us, as Lulu Group, India is one of the key markets, and within India, UP is one of our focus states, obviously because of the population in the state and also because of the very proactive and supportive government and governance that is there in the state. The Honorable Chief Minister Shri Yogi Adityanath ji, under his leadership, I think we've seen tremendous changes happening in the state, and his entire team, whether it is all the ministers or the officials, bureaucrats and the government offices, everybody have been very, very supportive for us in all our endeavors here. So we look forward to working with them very closely and increasing our footprint here in the state of Uttar Pradesh.
Absolutely. You just also signed an MOU in Karnataka as well. What are the other cities' plans except from UP and Karnataka towards northern India? Could you give us a highlight there?
Well, as I said earlier, India is one of our focus markets for our group, so we will be expanding across the country. We'll be coming up in Tamil Nadu, we'll be coming up in Telangana, and also in North India. So it's a step-by-step.
But I've been observing not very much, no good answer on North India. Is North India right now not in the pipeline, or North India is not?
Definitely there. It's definitely there. Yeah, we are coming up in MP. We signed an MOU, last month in Indore. There was an investment summit. Our chairman has declared a project in MP as well. We'll be coming up with outlets in the NCR region also. We are an organization who believes in doing rather than just mentioning. So you will see a lot of our presence across the country very soon.
That's it from me, Chaiti Narula, on this version of Business Today's show. Keep watching India Today and don't forget to log on to indiatoday.in or download our app. Thanks for watching. Thanks for your time. Good night.